Not a financial advice. Do your own research. These are conversations we end up hearing from analysts. And what does this really mean? Especially when it has to do with doing your own research. And that's where we come in as regards In Good Company. Here we bring you some of the top conversations and some of the top stories making the rounds around different companies. And even for you to understand what it takes to for you to understand their growth trajectory, you to understand their revenue, and have a feel about a few of their numbers, so that you'll be able to take that reset before going into the capital market to buy shares, or perhaps even buy whatever asset you want to buy or whatever company you want to buy. And that's why we have In Good Company. You're very much welcome. My name is Frank Fagbo. Now joining me right now for this conversation is a city gentleman. But before we go into our guest for today, we're going to be taking a look at what company are we talking about. We're talking about VFD Group. They've been in the news lately for a lot of stories. They've been in the news on the positive side, as a matter of fact. Decent numbers, if you ask me. Just last week, we saw VFD going to the market and having some debt issuance and in form of commercial papers. Lots of conversations around that is what we're going to be having today. We have no other person but Idika Aja, who is a financial analyst and a city gentleman. You know what that means? A city gentleman. Go and find out. You're very much welcome to In Good Company.
Yeah, thank you very much, Frank. It's good to be here.
Yeah, what's your take? Let's take a look at the general overview of VFD. They've been in the news lately. It's been a lot of stories around their numbers. A lot of investors, many of them are smiling to the bank right now, especially those who trusted them when they IPO'd. It was in 2023 and all that. And they are one of the first financial fintech companies to be listed in our capital market. And they're doing well. What's your take? What's the general overview about VFD Group?
Okay, thank you very much, Frank. Yes, because of the performance of the VFD Group of recent, so it is worthwhile for us to look at them, what they have done so far, especially in the past 2 weeks. But aside that, let us look at their overview. VFD Group is operates as an investment company, and the company focuses on investment in financial services, healthcare, oil and gas, real estate, and they have done quite well. As a matter of fact, they started operation in 2009, and active, that's when it was incorporated, and actively started operation in 2011. So after that, I think they have many subsidiaries that came on board, Ancoria Asset Management, which they got licensed, I think, in 2017, and they equally have a microfinance bank, VFD Microfinance Bank, and they have done quite well. Of recent, if you look at the share price performance, last year, I think they did 9.6%, and this year, the share price right now is they closed on Friday at 58 naira per share, having started the year at 44 naira 40 kobo. That marks about 30.6% year to date.
Oh yeah.
And ranking the company 27th on NGX in terms of share price performance. Then if you look at their market cap, based on that, I think they are equally done well. They are the 47th most valuable company right now, with I think with a market cap of 75 billion, marking about I think 0.13% of the total equity market.
That's total equity of 66 trillion.
Yeah. Right. So I think they have done very well, and that deserves attention.
The share price right now, 58 naira per unit share. What's behind that rally? It's the all-time high. If you look at their price, if you look at the chart from inception since when they got IPO'd till now, you're seeing 58 naira per unit share. That's some decent number. But what's behind that rally?
Okay, I think the key thing there is their 2024 performance. They did very well. 2024 was a turnaround for them. You know, they recorded loss in 2023.
Yeah, absolutely.
And in 2024, I think revenue grew by about 83% up. Then profit after tax grew by about 1,480 to about 10 billion. Then earning per share too grew by about 308 to 8.2 naira from the loss per share they made in 2023. And apart from that, if you look at the commercial paper, which we started on I think on 10th of February and ended on 14th of February. That could equally be a reason why there is that rally, because if you check now, the share price was flat in January, and between January and 14th of February, the thing has risen by 30.6%. So that is impressive. And apart from their wonderful performance in 2024, I think the CP2 they have issued, I think, attracted more attention.
I was even going to come to that. 270-day commercial paper is what they issued. And if you look at that, it's giving a yield of 30%. What do you think, what key financial moves did VFD do in 2024 that made them have this impressive rally?
Okay, now, they did a lot of restructuring and, in 2024. And in 2024, they did a right issue where I think they raised about 12 billion that they used to deleverage the balance sheet using their debt and debt equity and debt to asset. Now, apart from that, they equally sold their investment, divested in AB Mortgage. I think about 30% of them, where they raised about 3.1 million.
Was that their entire equity in AB Mortgage?
Well, I wouldn't know whether it was. It's an investment firm, so at times they invest and they come in and they move out. So, and they have equally gotten approval, I think, to sell off about 343 million shares in Atiat. I know Atiat is a decent company. I think around 2022 when they merged. So they are planning to offload their investment about 343 million shares there. Okay. Even though they have not started. But I think the first one, the right issue and the divestment, I think even helped them, prepare them to have a very wonderful year in 2024.
Interest rate was, if you look at the whole of 2024, we've never had MPR as high as it was in 2024. It rose as high as 27%. And many of the banks, so many of them, they made a lot of money, but at the same time, it was also a tough season for them. Because when you have interest rate that high, don't you think it's going to affect them in such a way? Because if you look at the banking sector, many people who came to get loans, would they be able to match up to pay back with a high interest rate that we've had over the years?
Yeah, technically, if you look at it very well, a discount rate of 24.9, which what they issued the commercial paper, the 30% is just an effective. That is what an investor is expected to earn at the end of the of maturity of the investment. That's if you hold it to maturity. Now, actually,
is that not too high?
Yeah, it's high, but we have to look at the prevalent situation.
What if MPR drops? What happens?
If MPR drops. Well, they have issued it. Now, when we'll start talking of maybe yield at maturity or inverted curve yield and so on, that is when that one will now come in. But once the thing is, remember that when you issue a CP, it is paid in advance.
Very true.
You understand, because it's discounted.
Very true.
So if you issue it down, you now pay the investors in advance. At maturity, you now get the first value. You understand? So what happens, normally what happens is if there is a rise or a fall in interest rate, you understand, it affects what we call reinvestment risk. But, well, that is not the issue. The issue right now is that look at the rate they issued. Is it high or low? Is it good for them or not? I think that should be our focus right now.
True.
And you can't really say whether it is high or not, because that is a prevalent situation right now. You understand? And remember that VFD is not a commercial bank. It's not a normal bank that they can have cheap money. So they have to go to the market, and what the market gives them is what they take.
That's right.
You understand? But the most important thing, and the key thing there, is that you have to equally look at what is your peculiarities, what is available to you. And like I said, last year they started deleveraging the balance sheet. You understand, with the proceeds from the right issue, which they did very well. I think their debt to equity ratio, I think, came down to I think 6.5. To 5 point something. I mean, asset to equity.
Okay, asset to equity.
Asset to equity, which is what we call equity multiples.
Yeah.
It came down from 6 point something to 5 point, which is good. But at that rate, it is still high. It is of high leverage. You understand?
Yeah.
Now, the key thing there, and another thing you have to consider is the interest coverage ratio. You understand? The interest coverage ratio came down to, I think, increased to about 1.37 from 1.02 they had in 2023. But still, it is still not good. Well, what is just telling you, they have a little leverage, you understand, to operate. So the interest coverage is still not too good at 1.37, though it's an improvement.
Yeah.
So these are the things you have to check, you understand, to actually know, okay, yes, we are borrowing at a very high rate or not. But I think in all, it is what the market that is given that they will take.
So the capital market is a marathon. I love to put it that way because it's an entire journey. What happens in your F1, let's say FY 2022 is different from what happened in FY 2023, 2024. But a lot of investors are looking at the long term. How sustainable can they maintain this? How sustainable can this growth be? Because you have, let's take for instance a student who is in school. You get a first class in 100 level. It doesn't mean, it's not a guarantee that you end up with a first class in your final year. You have to continue that momentum. Now, do you see them continuing this momentum based on their result and their revenue growth?
Yes, companies, they said they have their focus, they have their targets.
Yeah, that's right.
VFD inclusive, so they have their targets. I think they said their target about, I think I'm not too sure, maybe about 53 billion in revenue for 2025, right. And in 2024 they have already achieved about 83 billion in revenue. Oh, that is very, very good. That is impressive. You understand? But the main thing is that with the issuance of commercial paper, I think they have no choice than to maintain that sound performance, or that performance they did in 2023. Because if you don't do it, if you don't increase your profit, if you don't increase your revenue, definitely it will affect your balance sheet health.
Very true.
They have delivered their balance sheet, and they have gone back to the market, you understand, to get more money. Now, if they don't maintain that level of profitability and revenue, it will still affect them. Now, let me just explain further. The key thing there is that for any investment, because I looked at the figures they read out, that means the return on assets, return on equity, they did very well. The return on equity increased to 22%, which is good. Yeah. Now they have return on assets of 3.8.
Is that really good? 3.8?
No, I'm coming. Because you have to match it. Now they have a return on asset of 3.8. That's what they had in 2024, and return on equity 22. Remember, they are all improvements from what they did in 2023.
Yeah.
Now they have gone to the market now. Now, in terms of whether actually the figures are good or not, especially the return on asset, you have to look at the cost of capital, what we call weighted average cost of capital. Now, normally, if the weighted average cost of capital is higher than the return on assets, it means that the return you are getting from your investment, you understand, is less than what you are paying to invest. You understand?
Very true.
And give and take.
Which is a loss.
And give and take under what we call risk adjusted basis. That means they are losing. And give and take, we are looking at maybe they have about return on cost of capital about 23%, and you have return on asset about 3.8%. So basically, there is a mismatch.
Very true.
There is a negative spread there. So, and that means they have no option than to do very well, than to sustain the momentum they had in 2024, so that they're able to at least match what they are spending to finance their investments.
So what do you think investors should do right now? What will you advise investors do? Should they buy and hold VFD shares in 2025?
Well, for investors to know whether...
What should they consider before buying and holding?
One, you have to consider they are what we call the fundamentals.
Yeah.
And they have said it, they did very well in 2024, I think, which is even one of the things that one of the things that is driving their share price. Now,
do you also think that it's also a function of what is happening in the banking sector? Is that having a ripple effect in some of these lower cap bank shares like that of VFD?
Well,
because the banking sector, all of them did very well.
The banks, most of the banks, they have not released their results for 2024. I think only.
But the ones we've seen so far, decent numbers.
Yeah. You know, normally the interest rate environment favors the bank.
Very true.
You understand? So the higher the interest rate, at least they earn more on interest income. But remember, the impairment loss will equally increase. That is what happened to Zenith Bank in 2023.
Oh.
So Zenith Bank would have done better than even GTCO, but because they set aside impairments, there was a high impairment provisions, so that somehow moderated their growth. You understand?
Very true.
We are believing that this year they will do better. Now, aside that, you know, like I said, they are not real commercial banks. At least they go to the market to raise money.
Very true.
And you ask what investors should do. And I've said, you look at their performance, what they have done. And another thing too is that you have to consider the trading liquidity. Do you understand?
Okay.
The trading liquidity. I think they are 109 on the NGS in terms of trading liquidity. That means they are trading the number of shares traded on the platform, which is moderate, is good. But when you compare it with high trading stock like the banks, it might see as if, but to me, it is good. You have to consider that, because it doesn't make sense that you buy a share, you buy a stock, and it's not properly or it's not heavily traded. You find it very difficult to offload it. Yeah, that is another thing. Then another one is always good for core experts. That's what we call intrinsic value. And they're always good to buy. You understand? You know what they like. You quoted the 58 naira price. That is the market price. It might not be really what the stock is worth.
Oh, yeah, true though. Really but the market is ready to pay for that, so it means that it's
yes. But if you look at it, if we should look at the normal traditional,
so are you saying that it's overpriced?
No. I'm coming. If you look at the traditional valuations, like a price to book ratio and price to sale ratio, I think
their PE ratio too is also.
Yeah, PE ratio is about 7. Okay. That means is maybe to me is valued at a premium. You understand? But if you look at the price to sales ratio and price to book ratio, the price to book ratio I think is 0.14, and the other one is I think 0.10. That is the price to sale ratio, and that shows that the stock is relatively undervalued relative to its book value and revenue. And that is okay for investors to go in. You understand? So that is okay. These are the things you have to consider before you even buy. And again, too, you have to look at whether the stock for what we call income-oriented investors.
Okay.
In terms of dividends, you know, most of this one would mention, and the share price appreciation is capital gain.
Yeah, very true.
So for growth. Then for income-oriented investors, those who are interested in dividends. So you equally have to look whether they are coming on board, but we expect them to pay dividend this year, because they have projected that they are going to pay, I think, about 5.9 billion in dividends for 2024 financial year. You understand? That's one of their projections.
Okay.
So and
when is 2024 financial year ending?
It has ended now. They have just released their results.
We have a January to
they have released their
December.
They have released their results, and normally when they release their results, it's not left for them to see whether we are declaring dividend or not.
Well, when do you think it's going to be?
No, it can still come. It can still come. So it can still come. You know, last year I think they did split issue of shares, but I'm not too sure. But this year, if they declare dividend, it will equally help the share price improvement or something like that.
Your final take on VFD Group. What is your final take? What are your expectations? A lot of people will be watching definitely, and they'll be using this to determine whether to buy, hold, or sell. You said it's that a premium, a lot of things. What's your final take?
Well, normally you don't just make a recommendation.
Very true. Not a financial advice, though. You're listening.
It's just a financial.
It's not.
Don't just make recommendations.
Just for the purpose of information.
But for me, for those who are value investors, the stock appears undervalued.
Oh,
you understand? The stock appears undervalued, and you can go for it. Then for risk-averse investors, you have to consider the debt level, even though that they were able to deleverage the balance sheet.
Yeah.
But going back to the market again at a very high yields might equally take them back to increase their leverage. And for risk-averse investors, I think it's better to wait and see how they manage their debt level again as they're going. Because remember, they are going for 20 billion CP program.
Yeah.
So they have just started with 6 billion at discount rate of 24%.
That's this February.
Yes, the one they just issued, and you know that is at a very relatively high rate. There's nothing they can do because that is what is prevalent in the market. Most of the CPs that have been released on the same range from 25 to 27 to 30%. So I think it's the market order, and they don't really have any other thing, so any other choice to do or something like that.
Oh my! You've heard about VFD Group. It's your sole responsibility to determine whether you're going to buy or hold, or whether it's something you want to sell. It's all your decision to make as an investor. But what I'm sure we would always do in good company is that we'll bring you some of the decent numbers. We'll bring you all the numbers for you to be able to understand what it means for you to do your own research or make that informed decision as regards investing in the capital market. That's it. That's a wrap from us at Nairametrics TV. It's been a good time having conversations with you about the VFD Group. You've heard from Idika Aja, who is a city gentleman. Find out about that. These are stakeholders in the NGX, in the capital market, and also a financial analyst. Amazing session, if you ask me. Make sure you stay with us. Always watch in good company. Like, share, subscribe, and do have an amazing time. But remember that nothing said here is in any way financial advice. It's just for you to get an insight as to how these companies are performing and get an insight regarding their numbers. So with that information, you can use it to invest or do whatever it is you want to do with those numbers. That's it. Cheers.